that the earnings momentum will continue in this year?
Right. I think that's the most important question. And if from the year 2021, there was one central takeaway for investors in Indian equities, it was that if you look at corporate profits to GDP as a ratio in India, it was secularly declining between 2008 and 2020. And 2021 is the first year where this ratio seems to be turning the corner. So in FY21, for example, India's nominal GDP contracted by 3%. But if you look at Nifty's profits, they actually grew by 20%. So this secular decline in corporate profitability seems to have been arrested now. There have been good reasons for that. Obviously, corporates have resorted to a lot of cost optimization. Financial burden is very low because debt equities are lower. Interest rate itself is at a significantly lower level. And then, you've seen so much of support coming through from the government, first with respect to the corporate tax rate cut, then this entire thrust on formalization, which is helping organized sector gain at the expense of unorganized sector. And then, all these new reforms with respect to PLIs and labor code, etc. That just sort of helped this corporate earnings momentum. And, we are today at a level where GDP growth itself is very sluggish. Now imagine if GDP growth normalizes by moving higher as COVID, becomes a thing of the past, hopefully. And as profits as a proportion of GDP also start moving higher, I think you can have a scenario where earnings, actually are much more robust than they've been over the last decade or so. And, in that context, the last decade or so, earnings in India have grown at about 4% per annum on a CAGR basis. The long-term earnings trend in India has been more like 12-13%. We are starting at a significantly suppressed base, and there is room for optimism going forward. So again, this will depend on whether the Western world is too fast in normalizing their policy or not. But in the base case, as I said, we expect that policy normalization to stay behind the curve. And with COVID going away, we expect a lot of economic momentum to continue. So to that extent, yes, there is reason to be optimistic on earnings momentum also to continue going forward.
That's really good to know that yes, we can be optimistic about the market in the coming year as well. Also, when we talk about investors and the sentiments that they have, specifically on the last 1.5 or 2 years that we have seen in the market, specifically any investors or anybody who has entered the market in the year, let's say 2020, in the March 2020, they have already seen a bull run, like from lows of around 26,000 Sensex in the month of March 2020, and now that the market has reached almost 60,000, today was also around 59K was the closing. So if we look at this and the coming year as well, so can we expect a similar kind of growth in the market, or whatever the growth will be, what will be the key drivers in the equity markets, specifically in the year 2022? So let's say we have already discussed about the challenges about the COVID and interest rates hike and everything, but what are the positive factors? What will be the key drivers which will actually be contributing to the growth of equity markets?
Right. I mean, to answer your first question, no, I don't think we should expect the kind of vertical rise that we've seen over the last 6-7 quarters. And the reason for that is that this was a Goldilocks scenario, right, where policy support was very aggressive, rates were low, and on top of that there was hope of economic normalization. I think what's going to happen going forward is that, as I said earlier, policy is going to be normalized. So that's going to act as a drag on valuations. But at the same time, if economy and earnings continue grinding higher, then the markets can still be all right. So in the base case, you should expect markets to, yes, continue trending higher, but not at the same pace as it has been over the last 18 months. Now, what can be the positive triggers? I think for India, the most important positive trigger has been that there is this concerted push around manufacturing. The government is doing its part with respect to PLIs and tax cuts and so on. Globally, India is emerging as a viable alternative to China, as a lot of global companies and global countries look to diversify away from China, because this pandemic has very clearly proved that supply chain management doesn't mean just cutting costs and relying on one source. Supply chain management more means diversifying across sources, so that there are any challenges you are well diversified to take care of them. So to that extent, I think people are looking for alternatives, and India is emerging as a very viable alternative. And then you have other factors like cost of capital still being at multi-year, in fact several decade lows in India. So all of this put together, right? This thrust on manufacturing is something that very clearly is something that we shouldn't underestimate, and that's something that can propelling the India story for the next few years. The second thing, which is equally important to keep in mind, is that today you are at the cusp of that $2,000 per capita GDP. And history has shown that countries that move from that $2,000 per capita GDP higher, they tend to have a very non-linear effect on that tends to have a very non-linear effect on stuff like discretionary consumption and investments and so on. So from that point of view, also I think we are looking at a very interesting few years with respect to the consumption story in India. So both these things, right, the manufacturing piece coming together with the consumption story, I think does give us hope that there are positive triggers out there. But again, as an investor, for these things to play out, you have to be patient. You have to have at least a 3-year kind of an investment horizon. The short term can still be full of hiccups.
Right, right. So as it's always said that, when you're investing into the market, long-term horizon that you should always be keeping for investments. So I think that is what we'll have to keep in mind right now. And also, like you mentioned, that the growth that we can expect in future will be on a moderate basis. We cannot look at a very high spike, but yes, moderate growth in the long term is what we can expect, right? So yeah, that's good to know.